Thank you, Francis. Well, for that perspective, we're now joined this evening by Razia Khan from Standard Chartered. A very good evening to Ms. Khan. Thank you very much for your time this evening. Essentially, how is this being received by international investors?
Well, the market reaction, as demonstrated by the rand, has been very positive. There were, of course, mixed views in the run-up to this MPC meeting on whether there would be a tightening. In the end, what investors took away from this is that the Reserve Bank is a very credible inflation-targeting institution. Even against a fairly difficult growth backdrop, they were looking to the future, looking to underscore their commitment to a lower inflation rate to try to influence inflation expectations, and they took the action that they needed in order to do that positively. This hadn't been priced in by the markets at all. The rand has been gaining significantly on the back of this news. It is, of course, the Thanksgiving holiday today, so we may see this price action extended for some time still.
Yeah, now we know that the Reserve Bank has been very cautious about inflation, raising interest rates as a preemptive move. Was this the right way to go?
Absolutely. Incidentally, at Standard Chartered, we've been forecasting a quarter-point hike in interest rates in South Africa at the November meeting for a full year now. We shouldn't forget that there was that additional relief offered to the consumer with the cut earlier this year, and now we're seeing a reversal of that. This was necessary, even though oil prices have come off earlier highs in recent days. Looking at longer-term fundamentals, there is nothing to suggest that pain may not come back. The South African consumer might be able to better withstand the impact of higher oil prices, given that there is this commitment, this very strong commitment to inflation targeting, given also that the rand has benefited meaningfully from the underscoring of that commitment.
Yeah. Now, South Africa is struggling with low growth, and the bank is essentially saying that this is because of structural and political issues. It's not necessarily the mandate of the bank to actually achieve growth. Do you agree with this?
This is very true. It's very difficult to achieve any meaningful growth through interest rate policy. The best that can do is provide some element of cyclical support to the economy, but only when it's fully justified. And we should not forget, looking at where South African interest rates have been historically, that actually, even with this rate hike, monetary policy in South Africa is still very accommodative. Rates are nowhere as high as they had been in the past. By acting early today, the Reserve Bank has likely achieved a situation where it doesn't scramble to have to tighten even more in response to a future inflation threat. From that perspective, the South African consumer is actually better off.
From a global perspective, overall, how do you think, or how would you describe South Africa as actually being viewed overseas by investors? Recently, we saw the IMF saying that some of the initial euphoria from investors has faded.
There was lots of expectation of almost immediate change, and maybe from a growth perspective, this was a little unrealistic. It takes a while. There is a necessary lag involved between investment picking up, confidence levels picking up, both business confidence and consumer confidence, and that translating into meaningful growth. Global investors are also very aware of the very real structural challenges that the South African economy faces. But if we don't think that the achievement of perhaps a somewhat disappointing growth rate in 2018 takes away at all from the medium-term momentum that the South African economy is very easily capable of. Should we see a sustained improvement in confidence, should we see that translating into higher levels of investment, if at the same time we see important structural reforms being tackled, the South African economy becoming more competitive, the right social safety nets continuing to be put in place, the problems at the state-owned enterprises being tackled, greater transparency, all of this could feed into a much more positive picture.
Definitely. Thank you very much for your time this evening, Razia Khan from Standard Chartered, as we have a look at a global perspective on how those interest rates are going to be received. Over to you, Francis.